Good evening, everyone. This is John Locke, and you're watching the Lock in Your Success Trade and Market Update for November 10th, 2013. Before we get going, we'd like to remind you that the presentation is for educational purposes only. We're not broker-dealers or financial advisors, and we are not making specific trade recommendations. Also, any trades and or results covered in the presentation may or may not be live trades. In the event a trade is computer simulated, we do the best we can to make sure that it is accurately represented as possible. And also, the risk of loss in trading options can be substantial, so please be aware of all your risks prior to placing any trades. If you're watching this on SMB or YouTube, come on over, visit our trading blog, www.lockingyoursuccess.com, and join our mailing list so you can keep up to date with all the new changes. All right, let's take a look at the markets. Checking in with the SPX, we had continued sideways movement in the market last week. We were more or less expecting sideways in the Russell. Did our update last week. We did have a pretty good pull down on Thursday, but it just came into a support level, and we bounced that support level fairly hard. So that's certainly not bearish. If anything, it's bullish. If we come over and look at the NDX, same thing here. We had a breakout of our uptrend channel, and we came back down. We retested that and had a fairly significant bounce off of that. So that continues to be bullish as well in the short term. Dow Jones, we had a breakout early in the week. We had a failure of the breakout, and now we're back above our resistance area again. With this here, I would consider this neutral. I do not consider this bullish at this point, so this may roll over. So we're still getting some conflicting evidence in these three indices. If we come back and look at the Russell, again, we were expecting a sideways for the week, and we pretty much got exactly that. We opened up and closed pretty much the same area. If it was a little rocky getting there, especially for expiration week. If you remember, when we set this low back here the week before last, I was saying I would have expected it to come down closer to the 1080 level than where we bottomed out here. And that's what happened here. We broke this uptrend line, which isn't very surprising, and came down to the 1080 level, and we bounced that fairly hard. So that's what happened. Longer term, the Russell's still bullish also, although it's significantly lower than its highs compared to the other indices. So this has been weaker than normal. So that's looking at stuff at the daily level. If this was going to follow pattern, then what it's been doing is we've been having these bottoms, and it's been rocket shipping up about 100% of our move. And if it was going to follow pattern, we'd set a target in here at around 1165 and be expecting the market basically to rocket up to that area, which would happen to be the top of the trend channel, and then do the same thing here, run sideways for a while and then back off down towards the bottom of the channel. And it's been doing this all year basically, but we do have some longer term levels that we want to look at, because that may influence what's going to happen to this going forward. So while it's certainly not out of the question that this may follow pattern and rocket ship up to the 1170 level, what we have on our longer term charts is a pattern. And you know, we're really into pattern. We have a nice resistance level that was right here that broke, and that was preceding this very long run. If we take this pattern here and measure that out, let me try that again. If we take this pattern here and we measure it out, what we get is a top around the 1135 area. What that is telling me that this pattern has pretty much played itself out. So there's a very, very good chance that the market, or at least the Russell, may try to top out here at 1135. So that is something into consideration. So like I said, while we may get that run to 1170, I think it's more likely that we actually start to run a little bit more sideways here. Possibly poke a little bit higher, but not get that rocket ship move that we've been getting all for the last 12 months basically. And I believe that's going to settle down. So those are my thoughts. believe we continue sideways for the week, and that we close about where I expected the Russell to close on that circle. Now, one of the things you'll notice is I hit the wrong button here when I erased our trend line. And what that means is that I have to redo all my lines for next week. So you'll have all new lines on this chart for next week. I hate when that happens. All right, those are our expectations for the Russell. And since the Russell is topped out, I wouldn't be surprised if we see these things top out either, the SPX, the NDX, and the Dow. Even though they are still bullish patterns, I'm expecting everything to kind of level off for a little while now, maybe for at least for the next week or so. So that's what we have for the markets. Let's take a look at our positions. Why don't we go from the simple to the complex? We'll look at our December Bearish Butterfly first. This trade here was put on back on the 25th of October and has had no adjustments. The position just consists of an 1100 butterfly. Obviously that is doing well at this point. If we are right with our predictions and the market kind of flatlines here between the 1120 area and where we are now, then we should be doing very well later on in the month. If it continues to go higher, then we'll just follow our rules as the guidelines dictate. If we take a look at our December V Condor, we've had a lot of sideways movement basically, and that puts us in a position where we're up a little bit, but we also happen to be right in the center of our V here. And since we are getting later in the trade, if we spend much more time here, this V is possibly even this week, if it's flat, I'm going to start widening this out to bring our expiration line up, because who knows how long we're going to sit in the middle here. So that's basically the condition of this trade. No changes in the last week or since it's been put on. If we take a look at our November V Condor, that did get two minor adjustments this week, and mainly for the same reason. The market's just kind of hanging out in the center of our position. What I ended up doing is, if you look at our T-log here on the 4th, I widened out our straddle, or actually it was a strangle at that point, all the way to 1110 for the calls and 1010 for the puts. And then on the 6th, I ended up selling both of those out. So now we're just in a straight condor, and the position is up about $3,800, and we have about the maximum amount we're going to get out of this. However, I'm not too concerned about it. I'm a little bit concerned about running the call if we do have that scenario where the market tries to take a run to 1175. I don't think that's very likely, but basically I have a fallback plan. If we start pushing 1125, this will just get call side will just get closed, and we'll take what we can get on this. But otherwise, it's going to expire at around $3,600, which is just about a normal return for one of these V Condors. If we take a look at our November rock trade, we start to, if you remember, we were in a cat position. So let's take a look at that. All right, so here's our November rock trade. We are in 1130 butterflies and 1070 butterflies. It has required no adjustments since the last visit, and we're sitting here in the center of our position, pretty much maxed out on our profit and loss. Very, very likely just going to expire this. If we get a fairly large move in either direction, we could get something a little bit more, but my plan here basically is to expire this at about $4,400. Less than a normal return for a rock trade, but it's been a little tough with the low volatility in the chop. This has been doing extremely well for the year though, so this is looking good. And the next trade would be the November Bearish Butterfly. If you go back to Monday, towards the end of the day, the delta was too high, so I ended up buying two of these 1130 butterflies. Our profit and loss was about $3,700. You take a look at it here. And then on Tuesday, if we come towards the middle of the day, we're up near our low profit target, And in the next hour or so, the pricing came in, and we ended up closing this a little bit over $5,000 for the month, which was a low profit target. And I was perfectly happy to take that after the huge run against us that we've had. So that was about a 10% gain on our planned capital of $50,000. And we were overcapitalized during the duration of the trade because of the low volatility grind up. And last but not least would be the November M3 trade. If we go back to Monday around 10:30, you'll see we had our original position on here of this broken wing iron condor with the call, and we got the down move last week. I ended up buying two 1060 butterflies. Well, we had a bounce this day, so I ended up selling those back off again before the end of the day. I also ended up buying two 1100, 1110 call vertical spreads. So those butterflies were gone, and I took two of these 1100s up to 1110. On Tuesday, the market continued up, and if we take a look at Tuesday towards the end of the day, you'll see I bought another two of these 1100, 1110 verticals. If we take a look at our analyzed graph, this is what we look like. Basically, protecting my upside here because we've been having these horrendous upruns into expiration and the market conditions have been bullish. So we've been trying to keep our delta a little bit flatter than normal. On Wednesday, the market came back down again, ended up buying back not just two of those 1060s, but four of them. Actually, that was not on Wednesday, that was on Thursday when we had the down move. So let's go into Thursday. I must have done that earlier in the morning because we're still okay here with our delta numbers. Yeah, so we start coming down on Thursday, and we get our four butterflies here at 1060. Then later in the day, we had to make a major adjustment towards the end of the day. So what we did with that, let's just go to the very end of the day, is we ended up buying the full lot of these 1060 butterflies, so that now what I have here, instead of that condor deal, I have put butterflies at 1060, and I have 10 of them. Then I ended up buying 10 1080, 1030 put spreads to roll our long puts all the way down to 1160 to balance off our 1160 shorts here. And then I ended up buying 10 1060, 1020 call spreads to correct the position here, and I sold four 1080 at 1110 call spreads to get to this position where I'm at now. So here is where we're at. If you want to look at the T-log to cover those, here are on the 7th. These are the 6 butterflies that I bought. This is one of the vertical spreads, and this is the other vertical spread right here. And here's the last vertical spread right in these 4 right here on 10.7. And then of course we had that huge whipsaw on Friday, and I ended up rolling these 1080s up to 1100. So now this position basically consists of 10 1060 butterflies, 10 1060 1100 call verticals, and 1 1020 call. We're minus 69 delta coming into the weekend, and the position currently looks like this. So this one is either going to take a small win or a small loss. So we're doing well, we're profitable, but yeah, with the M3, but it has been a tough year for it. All right, so that is all our positions, as well as the market update. And like I said, while if the pattern holds, we're going to get a very huge up move. However, I feel more strongly that we're probably going to run sideways. I hope everybody has a great week. Thank you, and have a great expiration week.